Good afternoon. It's our 3 p.m. again, and today I bring to you some new knowledge. Some new knowledge called the One Big Beautiful Bill. This is quote-unquote President Trump's words about the kind of legislation that he wants to bring to us. So let's understand the upcoming 2025 tax changes. You see, we are the tax gurus, right? We are the tax strategists. So I care about that piece of legislation, how that comes through, what's the rumor says, and what the President Trump gonna approve at the end. So let's go through this and give you a very simple, I'm not complicated. So my understanding is very straightforward. So when I tell you my understanding, I promise you will get it, because this is a Chinglish session, right? English is simple, thought is simple and clear, and that is what we are branded for. We are branded as someone not confusing. So we're going to tell you what's in the bill, what is upcoming, and maybe give you some ideas of when you do your 2025 tax return, you need to do something different. All right, let's get going. So before, it's like a routine, right? Every time we started the webinar, we always brag about our firm. And just in case you don't know us yet, communitycpa.com. You should come to our website. The reason is you find resources. You will see what we talk about recently, and you can book an appointment with us. You can also onboard with us without even talking to me, talking to anybody. You go on board with us. You sign up, you subscribe your own, you sign up on your own, and then you can upload your information, and then we will get it, and we will contact you. Then you become our dear client. We have more than 12,000 clients. But that's not to say that you're not important when you come, you're going to be a number. No, you cannot be a number in a CPA firm because we know so much about you. So every one of you come and you have that person you need to talk to, and we give you the channel to communicate with us, and you literally can call me up 24/7 to have a meeting with me, because that appointment button is for that. You can meet me with your own timeline and see what I have open, so you can see me online as well. So this is our YouTube channel, Community CPA. If you ever wonder what to do today or tomorrow or over the weekend, I recommend you to come over here. The reason is knowledge and the health are the only thing belongs to you, does not belong to anybody else. Other than that, everything else of yours is actually owned by other people, even your happiness. And you think the happiness is yours? No, your happiness is based on others, because the outside environment gave you the sense of you could be happy or you can be miserable. Just like when President Trump levied this 145% of tariff tax, there's people are not happy. There's also people happy, which I don't know who is happy. I only know the people who are not happy. See, that is the outside of the force giving you happiness, right? Or unhappiness. So I want to say that knowledge and your health are the only two. You can own it 100% on your own. So you come to this website, you come to this YouTube channel, and you gain knowledge. You gain it for yourself. Not for Community CPA, not for Ying, and you don't even need me if you know everything I talk about here, because you absolutely can take care of yourself. Our channel is meant for you to do it yourself. About our firm, I already mentioned we have lots of clients, and we have 5 different branches, and Houston, Texas being our last one, we just established and still growing it. And I have 2 books I wrote already, and I still have 2 more on the liability side, which means it's supposed to come out and need to come out, so it's the liability I have to the world. And I want to say that my book is written really representing the small, medium-sized businesses. If you want to start your business, read my 8 a.m. If you are already having a business and you're growing it, read 10 a.m. But if you have your business, you grow so well, you're proud of your earnings, and you're on the 8 digits level, then you need to read our 2 p.m. book. That, of course, is not published yet, but I'm writing it. And so that will give you an idea of how to expand your business. All right, my 6 p.m., which is the last book I want to write in this 4-book series, it is How to Retire from Your Business. Don't ask me how yet because I don't know, but that's one of the books I meant to write. No responsibility disclaimer. This is just to say that whatever you hear me saying, and don't hold that against me. Don't. Because it's only come out of good heart. I know what I know. I don't know what I don't know. So if it is not right, you can send me an email and criticize me, whatever you want to do. But don't based on that make a wrong decision for yourself. And we do go through our due diligence here to make sure our content is relevant, is correct. But you can only do so much with things changing overnight, just like tariff tax, right? It changes from the morning 8 o'clock, it's different from 8 p.m. So, even policy at White House changes in this kind of degree, and you don't think the knowledge out there changes faster than that? It has to. So knowledge can expire. Just make sure that you follow the newest for your action backing, right? All right. The one big beautiful bill. That's not a normal. That's not a normal English to me. Okay, it is a special term that President Trump uses for a special meaning. Let me explain that to you. And then this sentence came in back in 2017 when he was running for election, and he uses this term repetitively representing a debate over health care reform. That time he was talking about Obamacare, so one of his campaign promise is to come up with one big beautiful bill, overturn that Obamacare and providing Americans a better future. So, quote unquote, he said, we're going to have a health care plan that is going to be second to none. It is going to be great, and we are going to get it done in one big, beautiful bill. That's how that came about. Obviously, it didn't happen in that 4 years. So now, in the second term, and President Trump is using the same phrase to express a meaning. It is not just the one, or the big, or the beautiful, or the bill. It is a sentiment. It is a spirit that he's trying to convey. So basically, the one big beautiful bill is at the center of U.S. political debate as a sweeping legislative package. It's like a one package is one. And this package is not going to be here and there patched together. It's not going to be sporadically, anecdotally stated anywhere outside of where. And it is going to be a big bill, but it's just one, in the one bill that accomplished everything. So this is what, whether it's beautiful or not, I don't know. It wasn't written in cursive, so I figured it's neutral. But of course, President Trump sees everything beautiful, right? We knew that. So he talks about being beautiful. In this one big beautiful bill really is the center of spirit where President Trump wants that to be a simple, big, comprehensive bill that covers everything that he promised in his campaign trail when he was running for president. So I want to refresh you of the 2025 promises that President Trump had when he was running for election. So I specifically focus on tax policy because this is where I am most familiar with. And he also mentioned about Medicaid and social program cut. That's his promise to cut it down. And then he also talked about spending cut and the deficit impact, and talking about rolling back the clean energy related programs and to save money and to cut Biden's programs and those kind of things. I really didn't study that, so I really don't have anything to say about it. Energy and environment, the same thing. He wants to roll back to save more money. Then other provisions is more like he wants to create a mega accounts, right? So he named the mega account not the mega Republican Party, but is money accounts for growth and advancement. That's what they called it. So he wants to set up this account not for mega Republicans, but it's for the children and to eliminate gun taxes, some taxes related to gun. By the way, I don't own one, so I don't understand the gun. And we do have a client who sells guns, but that's to the extent I know. So I don't really know about this provision related to gun. Anyway, on the tax side, there's a couple of things I want you to just remember. Approximately 3.7 to 5 trillion in tax cut over a decade. So that just means that over the next 10 years, and we're going to cut $3 to $5 trillion in taxes. So how to cut that, that's in the detail, right? But this is his goal. And then make permanent the individual business tax cut from Trump's first term. He's referring to the Job Act, where the personal tax rate was lowered to 37% instead of 39.6%. And the corporation tax rate was lowered to 15% in his first term. But when President Biden come around, and it was changed to 21%, right? It was 30-some% before. So he is talking about that the tax rate to be permanent. Eliminate taxes on tips and overtime. This is something that the administration is actively working on it right now as we speak. When they say eliminating taxes, I guess I don't really know whether they're eliminating Social Security, Medicare taxes, or they're eliminating income taxes. So are they eliminating the employer portion of match? So what are they eliminating? It was not clear, but it is something they're working on. Providing new deduction for seniors, and that is something we haven't really have any details yet, but this is another promise he has during the campaign time. Provide new deductions for car loan interest. So, this is also a one-off thing, and he wants to do certain things for car loan. These are all in the these are all in the 2025 promise, right? So with that said, we can see these tax policies as a promise to the public before he becomes president. Now he is the president, so he's coming in to start doing that. Now let's take a look. On Friday, May 9th, the House Ways and Means Committee released a portion of its draft tax legislation. So this is not to, we're talking about this today, but this is coming out on May 9th. Of course, they continue to work on it, so you will see us continue to update you. So they're calling this one the One Big Beautiful Bill. And such a history, right? And I really enjoy knowing those. It's almost like a slang language, right? Talking about understand the culture, American culture, and being part of the fabrics of American people's life. And you want to understand when people say things like that. Actually, I felt like the One Big Beautiful Bill, this term is almost like elementary school students would talk like that. But, that's fine. That's a characteristic of President Trump. And he uses very tremendous. This is tremendous. And that is, beautiful. Those are, I actually know 3 words was used a lot in his talk. So tremendous and beautiful and big, and it's just things that he always used that as an adjective. All right, so this May 9th, and they primarily focused on expanding and making permanent of certain key provisions that from 2017. 2017, that is the Tax Cuts and Jobs Act that come out of the president's office, right? When Trump became president, when Trump 1.0 at that time. So this was the act came out. Actually, President Biden didn't really do much about it, other than make some minor changes. He carried on with the same, but majority of these provisions in that Job Act is expiring this year, 2025. So it's almost a perfect timing for President Trump come around, goes, oh yes, this is my baby, now let me fix them again. So he is coming up with new things. So here a couple of things that sort of set in stone already, that to be changed. Of course, it is just past the Ways and Means Committee, and they still need the Congress to endorse, to approve, so it's become a law. But once it's coming through, you can see that what's already on the table to be butchered. If you call the examination and commenting period voting, and if you call that butchering period, but it's not dead, it's butchering to life. So that's a different concept. It coincides with this one big beautiful bill, and I think it's all word games after all. And includes major tax cuts, spending changes, policy shift aligning to the Trump's agenda, right? Let's look at the first one I want to bring to you. This is in the 2025 House Ways and Means Committee. They released this on May 9th. Section 174. And don't get hung up with these section numbers. You can kick it. You don't need to care about it, right? And our small, medium-sized business people, and you don't have a reason to go into section. I think people put on the section there is for their own convenience. Like for me, you put section in there, and in my head is a paragraph of things I know how to describe it. Because I got used to calling it Section 174. We knew it's like a passcode, right? You have it, you know. But for business owners, you want to know that this first item we're talking about is R&D. Is research and development, tax credit, and expenditure treatment. So in this section, if you don't know a lot details about R&D, let me say this to you. In 2022, 2023, 2024, these 3 years, the R&D tax incentive is pretty much dead because the way it legislated is no benefit to majority of the business owners. So not a lot of people use it, but you do have people who had utilized R&D before 2022, which means 2021, 2020, because the rule was like that before. So now what it happens is they're bringing back what happened in 2021 to be in 2025. So the treatment came back, and anyone who has done R&D claim in 2021 and or before, you will be familiar with what happens in 2025, but you cannot go back to retroactively fix 2022, 2023, and 2024. That's water under the bridge, and you just let it go. Whatever you did, that's whatever you did. Now, you look at 2025. Folks, if you do R&D in 2025, we're in the month of May. Be careful, be sensitive that there's a new rule coming out. You want to ask how that applies to you. And this will last to 2030. So we're in 2025, am I right? So 2030 means 5 years. So there's a 5 years we can claim R&D. So in a big way, let me explain to you in Chinglish about Section 174. So basically, let's say you spend $5 on R&D expense. Of course, R&D expenses are including the salary, the material, a bunch of things. Let's not go into detail of that. Let's say you have $5 R&D expense. So in 2025, you can reduce the $5 out of your income right away. At the same time, you can also use this $5 to calculate tax credit. So if you do a little bit more work to do an election, then your tax credit would not change what you do on your $5 expenses. You can just use your income minus $5, and then whatever profit you pay taxes. But the taxes you pay will be reduced by the tax credit calculated based on your $5 expenditures. So it's almost like a double whammy, double counting that's incentives, right? That's a benefit. That is what government gives to the entrepreneurs like you. If you do R&D kind of expenses, and then you can be like that. You can get a little bit of double deduction. Not exactly double deduction, is a credit, tax credit, that on top of you already deduct your expense, you got that credit. So that is the core of R&D. So knowing that is what that is, so you need to ask your accountant or your CPA, am I qualified for R&D? Is this a R&D? Because you want to know. Maybe you spend some money, that is R&D. If you don't ask that question, that is not R&D, you cannot calculate tax credit, right? Tax credit means that it will reduce the tax dollar you paid on the bottom line. If you pay $10 taxes with tax credit of $10, you pay nothing, right? Big deal. It's truly a big deal. And so here it says that to revert the treatment to revert the treatment from 2022-34 and starting anew. So the date is starting is December 31st, 2024. So pretty much give you a whole year of 2025. So that's my way of explaining. Our PowerPoint really trying to give you a more systematic explanation. You can always look at that. So the bill proposed to revert the Section 280C election to a previous treatment, permitting reduced credit instead of a add back to business claiming the Section 41 R&D tax credit. So this is where the election I was talking about. So if you do a little bit more work, okay, and then you can actually have even more advantage, and the calculation is a lot more smooth. So this is where, as an entrepreneur, you really don't need to get down your knees to calculate. That's what your accountant would do. That's what your tax strategist, your tax advisor would do that for you, tell you whether you do election or not election, and you will know the difference. So this provision will start on December 31st, 2020, and amortization requirement from prior, like 22, 23, 24, they still stay the same, folks. So don't touch those 3 years and start 2025. So practically, if you are a company, feel like you're doing R&D, you absolutely need to ask the question. You need to ask to your accountant that, is this R&D? If they say, yes, but I already deducted for you, and then you want to know that there's twofold of benefit. One is deduction, 100%. The other one is tax credit calculation. So you want to make sure your endeavor qualifies for R&D. All right. The second one is on the table from May 9th. The draft they released has this one. This is a very interesting one. This is a bonus depreciation for properties. I want to say that you know what that is, because over the years you heard of, oh yeah, I can deduct 100%. Oh yeah, next year 80%. Oh yeah, 2023 was 60, 2024 was 40. So you remember that, right? That is the bonus depreciation. That's Job Act introduced it. So it's slowly going away, 2025 going away. So now it says, the draft says, if you bought the property after President Trump got into the White House, January the 19th, 2025, what is that day? That is the last day Biden administration was active. So President Trump came into the office on January the 20th. So the draft law says the bill reinstate 100% bonus depreciation for property acquired after January the 19th, 2025, and before January the 1st, 2030. So what that says is you should never bought anything when President Trump was not president. It's your fault if you bought anything between January the 1st to January the 19th. You should have bought everything just after the January the 20th. I'm impressing you to remember this date because this will be written into the tax software. So the tax engineer, when they come up with the tax software for the CPA firms, what they need to do, they need to create a condition where when you document your property, when you document your tractors, and then you put in January the 18th or you put in January the 20th, makes a big difference. Because your tractor, you bought an $85,000 tractor, it can be deducted 100% out of your profit, or can only be deducted 40% or even less because you bought it 2 days too early. All right, so this is the bonus depreciation is in the proposal, and this of course is only for the property that you bought between January the 20th to December 31st, 2029, right? And the bill allows for immediate expenses, means 100% right off, and you don't need to wait. So I know you're going to ask me, what kind of property? Does that mean my house? No, not your house. It's qualified production property. Just by the word itself means that it needs to be those assets. I know it's called property, makes a lot of people think it's house. No, it's asset. It's the thing that you don't digest in one night. It is something you use it for a couple of years. They're asset. So those assets used directly in production of tangible personal property. So what is tangible? Tangible is things you can feel and touch. Intangible are invisible. So they're talking about assets that are used for production, manufacturing, construction, things like that, right? And what is excluded is used or purchased property, non-production areas like office, lab, administrative spaces. So it just says that there are exceptions. So you want to make sure you speak to your CPAs, making sure what you buy qualifies, right? So make sure that if you buy used one, it's not new. If you buy John Deere tractor, that's a used one. It's not qualified production property. But if you buy new ones, it is. Given the fact that if the John Deere tractors is used for your farming activities or for your construction activities or your business activities, right? All right. So this is the bonus depreciation. Isn't that fun? They are coming back, and now we are already busy talking to our client to make sure that if they want to purchase anything and purchase any qualified production properties, do it because it helps them to pay less taxes. All right, Section 163J charges. So I know, don't forget about the section. What it's talking about is that when you borrow a lot of money to do your business, you have interest expense, right? In some cases, you cannot deduct all of it. So there's a tax code, Section 163J, limits you from deducting all of it because your adjusted taxable income, it is certain amount. They only allow you to do 30% of the deduction, the equivalent amount. So this law, this one big beautiful bill is trying to it's trying to give you more interest expense to deduct. So that's really the core I need you to understand. You don't have to go to study what is ATI and what is EBIT and what is EBITDA, and it just is all abbreviated names for accountant to know how to calculate that base number, then use that 30% to say, oh yeah, you can deduct 1 million or you can deduct only 10,000. It just depends on the base amount, right? So that's the legislature they're doing, trying to make the base amount relatively loose. So they have a bigger amount than 30% of bigger amount is bigger than 30% of a smaller amount. Make sense? So that is the interest expense deduction is largely benefiting large companies. Companies with a lot of leverage. Small businesses, I mean, there is a saying about small business are those business who cooks with their own oil, which means that small business don't borrow that much. They just they just do what they can do. They're small, so they don't even realize that, oh, what? I can deduct interest expense. How do I have interest expense? Oh, yeah, right. You have to borrow a lot of money to have a business expense, to have interest expense. So this section is largely for large company. We have our medium-sized companies come through this, and the large companies like those big companies out there and who donated a lot of money to Trump's campaign, they have a lot of that. So they are the one benefiting from that largely. All right, so the draft bill, here is further explaining and how this bill would benefit the business, because if you incurred real interest expenses, but the calculation only allow you to deduct partial of it, you feel defeated, right? Because you have so much taxes to pay, but now your interest expense cannot be deducted. This bill is trying to make your deduction better. All right. The other one was on the proposal, which is quite interesting, which is not just for the large business, it's also for the small one. In fact, it's for everyone who has applied for employee retention credit. So this bill says that the ERC remains a key focus for reducing fraud and recapturing funds. What they're saying is that they still want to put a lot of manpower into fraud detecting and fund recollecting. So if they give you money, they don't think you qualify, they will come to get it from you. So this is the ERC. Obviously, that is, I would imagine that it is for everyone who have applied for the credit, right? So it is not specifically for big or small, but the bigger your refund, your ERC amount is, then obviously the chances of getting audited is greater. The proposed package increases penalty for fraudulent ERC promoters and allows any new ERC and disallows any new ERC claimed and filed after January the 1st, 2024. So now this is in the proposal. So folks, if you knew your ERC was submitted after January the 31st, 2024, but you haven't really received it, so this proposal says that you won't get anything because they are disallowing it, period, after January the 31st, 2024. But if you received it already, but you actually claimed it, you filed it after January 31st, 2024, that just means that you need to get ready to pay it back. So that's what the proposal is going. If enacted, the legislature will extend the statutory limitation time to 6 years. So 6 years means that if you claimed it on year 1, they have year 2 to year 6 time to come back to you, say, hey, we like to look at how you claim your ERC to make sure that you are going by the rules. So this is the proposal related to ERC, folks. I thought that's pretty clear, and you know what the Trump administration is gearing up to do. Energy provisions. So the bill updates and modifies several energy tax provisions. And the changes include earlier phase out of the Section 48 and the 48E tax credit, eliminate of the 30C alternative fuel refilling station tax credit, and removal of 45L energy efficient home credit. So a lot of these, I know it's a code you are not particularly involved with, but the people who does home construction, the people who are in the energy efficient home building, they know exactly what that is. So those are going to be early phased out, means that they won't last very long and they are cutting it off. The bill does not change any provisions related to 179D energy efficient building deduction. So that is specifically carved out. It is related to the building, energy efficient building. And the proposed changes to energy tax provision in the draft bill could have mixed impact on business, partially those in construction, real estate, clean energy, and transportation. So what they're saying is that the bill, because it's early phase out, so it could have impact on if you got a proposal out already, but that construction don't start until the bill is already phased out, then you really need to reconsider your business. So it will bring business changes for sure. And these credits supports investment in renewable energy projects like solar, wind, and geothermal. So those are all impacted. Clean energy developer may face reduced incentives, potential slowing the new project development like wind energy, things like that. Business planning to install renewable energy system like solar panels, the cost will increase because the credit won't be there. And it's definitely gonna discourage long-term investment in green infrastructure unless the projects are accelerated and meet the new deadlines. So it's a lot of urgent calls gonna happen on energy provision, but they didn't give details on what kind of early phase out that is. So it's coming. So this is 48 and 48E. This is largely related to solar, wind, and those kind of energy. And elimination of 30C alternative fuel filling station tax credit. This credit helps to offset the cost of installing electronic vehicle charging station and other alternative fuel infrastructure. It's just not gonna be there for you. And so it will slow down the electronic vehicle infrastructure expansion. And have you heard of the press secretary, Carolyn was talking about, people who drives electronic vehicle. She literally said that those who drives Tesla and electronic vehicles are Democrats. And so it's like, I couldn't believe it. I'm sorry, I'm not Democrat, okay? But I have 3 Teslas. So this is just like crazy stuff. So the bill is kind of slowing down electronic vehicle. Then you have Tesla, you have Elon Musk in the center of the mega supporters. I don't know how to do the math related to this. I felt really in chaos. I really don't want anybody to label me a Democrat, and that's just not right. That is, so according to her, if you have a Tesla, you're a Democrat, then I have 3, so I'm 3 times of Democrats. Man, I don't know, that's a promotion or that's a demotion. So I just I don't even know. I wish we don't have social media so I don't have to hear those kind of garbages. All right, removing of 55L energy efficient home credit. This credit provides $5,000 per home for builders who are doing energy efficient residential properties. So that removal, okay? Some home builders, developers will lose these key incentives and will lead into higher homes and things like that. So, see? The proposal, right? It's only a proposal, so that's coming, and it is coming piece by piece with what was promised by President Trump during his election time. He literally is fulfilling everything that he promised on the campaign trail, and we see that roadmap, right? And that is very clear. So American people voted him. He gained the majority vote. He became the president. It's only right for him to get everything done because that is literally what he promised. And if you are sitting here goes, oh yeah, I didn't know. I thought he was just joking. In politics, there's no jokes. They're only statements. Just like they say, everyone who drives Tesla, you are just getting promoted to be Democrats. All right. What what was not mentioned in one big beautiful bill so far, I want to list a couple of these for you because I am watching, trying to see whether they're going to get that finalized. One is the income tax rate reduction from 39.6% to 37%. So that is something that is coming through in the, it was the proposal back in 2017. So we are still at the 37%. But if it expires, we'll go back to 39.6. But of course, this is a high tax bracket, right? So majority of the Americans are not in that category. So you can see that is the tax cut for the wealthy. Now, tips and overtime, no tax. Remember I said that this is in the working, but we don't know which tax we're talking about. If it is a cut for employer Social Security Medicare portion, it is still a no tax, but it's no tax to the employer, then that is kind of like for the upper level of earners again, right? So for the wealthy. But if it is no tax for income tax, most of the people who makes tips and overtime payment are our regular Americans. So that means that tax cut, it is for the majority of the population, is for the people of United States of America. So we'll see how that one comes around. And eliminating 10K limit on state and local tax bracket, that that one was on Schedule A. Remember, Trump basically, because he lives in Florida, so he doesn't pay state income tax. So he thought $10,000 is enough for everybody. But people who lives in Midwest, like, in Iowa, Minnesota, we pay state taxes. So when we pay state taxes, our state local taxes in that column can go up to $100,000. So if we only can deduct 10, it's a big loss for us, right? And it's actually a big loss for a lot of our clients. So Trump at one time said that he is going to eliminate that, even though that was the one he made it. He actually is the one made it to become 10K. Then he was like, oh, I don't know why I did it, so I don't think it's right. I'm going to change it. So that was one of the conversation I captured on the internet. So I hope that will be something he do and eliminate that, put it back like it was before, right? And regressive national sales tax. This one is still in the coming. So remember, Amazon wants to put tariff tax on their bill. They're actually, I would have a better recommendation for Jeff in terms of what to put on. I would put that as a national sales tax because it is, and it is regressive. Why do I say regressive? Why it is not progressive? Income tax rate is progressive because if you make little, you pay little. If you make more, you pay more. But sales tax is not. It's regressive because everyone pays. So, if you eat a banana a day, so whether you are homeless or you are, Elon Musk, it's the same banana. And so if that is of course, banana is not subject to sales tax, but I'm just saying that it's the same expenses, but whether you're poor or you're rich, you're paying the same. So that's regressive. The proportion of what the lower income people pay is much greater than the proportion what the rich people, wealthy people pay on the top. So if you have a single mother with several kids and she pays for national sales tax, you say that, oh, it only increased $3,000 of your annual expense, not much. But do you know how much they have? $3,000 might be their whole year grocery bill. So that is why I want to see whether the regressive national sales tax is implemented. Not a good news, but that looks like where we are going right now. So it is it's really sad because these tax stuff we are seeing largely benefiting the wealthy and really stripping away a lot of benefit at the lower value, at lower level. I know 3,000 increase per household sounds so piddly. It's nothing. I will say that everyone who works in the professional field probably it's okay with $3,000 a year more expense. But we are not considering people who are single mothers with a hourly rate, minimum hourly rate income. And when they have that $3,000 increase, that's huge. So, maybe the government will come up with compensations and the plans to alleviate that imbalanced, regressive national sales tax impact. Hopefully we don't end up there, right? So I'm not a politician, but I know if the economy is not satisfactory to the majority of bottom line, to the majority of the people, then you will start having issues. Your society is not going to be peaceful, stable, harmonious, is not going to come. People will struggle, crime will increase, then the government is going to use weapons, and then you're just going to have chaos. That is just we learned from video games. Even video games tell us that. So it's not like I have a big theory. No, I don't. But I do understand how that impacts the smallest people in our society. The reason is I was the smallest people in the society. So I understand. But if people have never was, doesn't know, and never understand, they don't have 25 cents to even make a phone call, then you have not lived the life for you to have a reason to know what we have gone through. So I am with you for the people who doesn't have $5 to buy food for a day. I knew how you feel. I have come through there with you. So I am here speaking the understanding. For a company, lower corporation tax rate back to 15%. This is largely for the wealthy. Okay, people already made money, they pay less taxes. And very good doing, and President Trump is definitely hardcore to support the elite, the wealthy, and he is one of them, and he is walking the path to protect these people. And it's just like he has never been to the lowest point as a human where you struggle for $5, so he doesn't have that understanding, and he will do what he knows how to do. Hopefully, overall, the budget is controllable, and overall, the country can still maintain the peaceful demeanors as a whole, right? Pass-through income deduction 20%. So this is the one expires 2025, so he will restate that. That's what he's promised. I didn't see that here in the proposal, but hopefully it will come through later. And change NOL carryback rule. NOL stopped carryback after Trump gave the 2018 when he passed the Job Act. So carryback means that, let's say if I have a big loss this year, 2025, but I have paid a lot of taxes in 2024, then I can go back to adjust my 2024 taxes, get money back, get some refund to help with my losses in this year. So that is no longer there. So hopefully that will be put back. Those are the things we are watching. We're watching on your behalf. All right. So much talk about proposal, right? I wish I don't have to talk about proposal, just to give you the one big, beautiful bill one day and in the minute, but it doesn't come through so easily. It's like going through labors, it takes time, So we will see what they come. I will continue to update you on my webinar. I really sincerely wish that you give me a thumb up on my webinar if you like what I say, if you share my view, you understand what I'm talking about. And with all of that, and I want to hear you supporting my channel by sending that to your other friend, your other people who are thinking similar. So let's just make sure that if we have anything to take care of, if we have anything, our power can work. There's a lot of things is out of your control. And for that, we gain our knowledge. That is one thing belongs to you, doesn't belong to anybody else. And we plan our every steps of a way in our business journey. So making sure that you're running your business successful no matter what. So tariff can come and the legislation can change, but you still finding ways to not only survive, but thrive. There's always business people thriving in a particular environment. Okay, I always say that. There's always business. I can tell you that because we have business successful, who are our clients. We also have business who are suffering, who are our clients. So we knew the economic world always has a way for you to be successful. You just have to change your thinking. And one advice I want to give to all the restaurant owners, if you're struggling with laborers, because you should not be hired undocumented immigrant and also harboring them by giving them housing and all the other survival tools, because you can be charged for 10 years prison sentence. And I am speaking with fact. So to say that, you need to look at your business model. If you're saying that, oh, Ying, if I don't do certain things, I won't have the business, then you don't have a business. You need to have a business that can survive with the right conditions. So I trust you are so smart, you are so hardworking, and you will find a way to survive your business with all the conditions met, so you will not get into problem with the government, with the current administration, and still, thrive, making more money in your business, right? All right, what you see right here is our partners. These are my partners, and we work together to build a very strong community CPA. And every single one of them and have a good heart understanding of small businesses, and you can tap into our time and we'll talk to you. The last slide, but not the least, is our channel. You want to subscribe to our YouTube channel so you get to know us. You want to know us because we're there for you. Without you gaining something from this channel, makes no sense for us to continue spending time. Every week we put out 3 to 4 videos. Okay, 2 in English, 1 in Spanish, 1 in Chinese, and next week we start launching Vietnamese. So we put out these channels, put out these videos just for you, because we want to reach to you, not just to reach your name, reach your heart. So you are here with us. I'll talk to you again. Bye-bye.